Good weekend, all. Ira Epstein with your Metal Market Wrap-Up, and this is your weekly edition, and it is for Sunday, and we're now at the 9th of January, 2022. So we keep hearing the inflation story. Gold isn't going with that. You had a run-up, don't get me wrong, in 2020. Remember, this is a monthly chart you're looking at now. So in 2020, you had a run-up. In 2021, if you really look at this market, all it did is slip during the year. Just study it. It's clear to me. And what kind of pressure are we under? Well, they keep telling us there's inflation, but gold just wants to disappoint. What's the trend right now? Well, you do have the pattern of higher lows, higher highs, which is an uptrend. However, for the month, you are down and under the 18-month moving average of closes in red, and momentum is sort of flat. So I'd call the chart neutral right here. On the weekly gold chart, the bias is up because the market is over the 18-week average of closes. When the market's over it, I use that as a filter on charts. I say, the bias is up, under it, the bias is down. Where's the battleground? It's clear. Neutral is that number. If you look at a weekly chart, it's hard to see that there's anything here that's constructive. You have a lower low, you have a higher high, you have an outside week down. That was this week. You fell from that right into the support of the 100-week average in green, 1797.80, to the 18-week average, 1793.20. Now, what would be bullish in this chart and turn me around a bit is if that 18-week got over the 100. Why? Well, moving average theory says that when you get the shortest term average over the medium, we'll call the 100 the medium, and the medium over the longer term, the 200, that'd be bullish. That's not what you have. You have a market that has just given you the opposite, where it's getting under it. Where's the resistance on rallies? Well, I can tell you right off the bat. It's got to be this week's high. You have an outside week down. If you take out the high of an outside week, the week after it was made or the week after that, a 2-week period, then I'll look for the market to go to the closest of an upper Bollinger Band or a key moving average. Well, all the averages are under you, so it's got to be this. It's got to be the Bollinger Band, and that would put 1858 in play. That has been a target, I've told you, if the market was going to be bullish, was very much in play. It still is, if that high is taken out, and I think that would capture the shorts and lift the market there in very short order. Where's momentum? Momentum on the weekly chart just turned down. So you have a market that, as I see it, is void of a trend. Momentum's turning down, and bias is slightly higher since it's over the 18-week average of closes. The gold-silver ratio is not bullish the metal market. Silver, when it's losing to gold, it means you got to have more ounces of silver all the way through. Yes, you were up here once into that 120 area. It's not a good sign for those type of metals, and silver actually turned bearish for the first time. I think the pros will sell it with both hands on rallies into the 100 and the 18 with a straight stop and a reversal over this week's high, targeting, if they can get it, the lower Bollinger Band. If you get to the Bollinger Band first, you got to rethink the game. But that's a bearish chart. In the copper market has got a lower low, higher high, sideways pattern. I think copper's waiting out Omicron's peak. In China, they're getting more and more cases. They're half the user of the world. So they use, remember, 50% of the world's supply is consumed by them. They're going into their new year, February 1st. They're having big amount of cases in city after city now, and their policy is a zero tolerance. They go into lockdowns. So is that going to help consumption? I can't imagine how it does. I could be wrong, but I don't see it. And there's nothing on the chart action. Platinum has entered the bear phase just like the silver market. So I think the pros will be selling this market with a straight stop over this week's high of $1,000. They'll actually use, I think, a $1,002 stop. And I think they'll be aggressively selling into these numbers, seeing what's under the market. Now, the first thing we saw is the 200-week support of the market. If that gives further ground, then the 891.20. Again, the bears have control of the market. You keep hearing the press tell you the dollar's going up, the dollar's going up. Not on this chart, it isn't. Even if this market took off this week, you have a lower low, higher high that can't change. If the market just doesn't take out this week's high, you will end up on the swing line with lower highs and a lower low at that point. This is a dangerous chart. You could be coming back down here at 94.97 to 94.81 before you know what's going on, and maybe that's where the game begins. So what's working against the dollar? Probably the idea of interest rates going up quicker than the market thought, slowing down the U.S. economy, and the fact that we're right in the bullseye level of Omicron about to hit us right now. All weekend, what did you see? You saw that Starbucks, Walmart's, FedEx, I can go on and on, everybody getting impacted by Omicron, small businesses shutting down, restaurants cutting back on hours. None of that's friendly to the economy right now. We're behind the UK by probably about 2 weeks or so on average, according to what the CDC is saying. Therefore, we haven't peaked. And our hospitals, as you know, they are getting strained, and the workers, the poor workers, it's wave after wave. You talk about American heroes, work in a hospital, they're American heroes. So you look at all this, and that's what you're dealing with. You know, the beauty is I cover this for you in mornings. At 5:30 in the morning, I'm recording. I get up about 3:34, and I'm reading from everything all over the world, and I bring it to you in the news in the morning first, along with my videos. So the idea is trade ideas. I don't manage people's money. What I do is I throw out the trade ideas at them. I want to be the guy that in the morning you wake up, you see what a market is, you want to see the chart action, I want to be your guy. You're not going to see that on CNBC and all those. They don't come out the way I'll do it in the futures markets and do this. I'm creating a niche, and we're proving it by the amount of subscribers that we keep growing with. You see at the end of the day these videos, but the morning videos are key because it's right in front of the market. And it's as the market's going. So I start the futures. I'm going to cover 40 different charts. Then right behind it, at 9 o'clock, I start recording in the stock arena. Why 9 o'clock? Because most of the major government reports are over by 9. I want the algorithm and fund money to deploy in the stock market the first 15 minutes or so, let it get set. So I give that other 15, all I'm doing is waiting for the final government reports, and then I begin the recording. Now I've got something to talk about. The futures set you up for what's going on in all your stock indices, the interest rates that you're looking at, your metals, the energies. I mean, it's quite a few spiders and ETFs. Then I take over with these. Now, I know you might want to look and see a specific. At the bottom, there's a scroll bar, and you pull it. It'll light up, and it's going to tell you stock indices, metals, currency, energies. Wherever I'm at, you're going to see them all in the order right there. You find them just like that. And yes, I cover the individual stocks. I rotate them as you tell me to. So my subscribers tell me what they want me to cover. I cover it, and then we go back to the ETFs, the big boy ones, because that's where people are. So how do you get all this is the question. What you get it's really pretty easy, because since I said it's 40, all you do is go to our website. And on the website, as you're there, you're going to go up to the word research. So it's www.iraepstein.com. Go up there, look at the research. It's all explained, not expensive, not about expense. We keep it exceptionally inexpensive. That's what helps the membership grow and where we're coming from. So how do you get there? Go to the website, under research, take a look. It's not even a tick in futures, the cost of these things typically. And you got free commissions anyways in stocks. I think you'll find a 20-minute video that you hop around. You have to watch all 20 minutes with the things you want covered. Might be something that appeals to you this year. I'm Ira. Have a good day.